Hello and welcome to NDTV Profit. You're watching IPO Adda, and the company in focus today is Motisons Jewellers. It's a Rajasthan-based retail jeweler. The IPO is coming out on December 18 and closes on December 20. Price between 552 to 55 rupees per share. Is a fresh issue of 149.5 crores. And joining me is Laksh Chhabra, who's the joint managing director of the company, and Kaustubh Chhabra, who's the chief financial officer of the company. Gentlemen, thank you very much for joining us on NDTV Profit. My first question to you is, Laksh, can you take us through the business that you have? How is it divided? And because you are just one city player, what is the kind of growth strategy that you have?
So thank you for having us. It's good to be here. And as you asked the question about the business model, I would say that we are one of the largest jewelry retailers in Rajasthan, and the company is divided into, like, we are more focused on gold than diamond. We are a jewelry trading company, and most of our uh, uh, we are more focused on gold and diamond and silver,
Hmm.
and and we are we started from 1997, and we are in the business for last 25 years and counting forward, and yeah.
Okay. Now, give me a sense that you have 4 retail stores based out of Jaipur. I was looking at your business revenue, which was there. Nearly 94.9% of revenue comes from trading.
Mhm.
Unlike other jewelers where there is a manufacturing and sales which happens. So it's basically a jewelry trading company. Is that what you're saying?
Yes. So we manufacture only when there's an specific order that has come along, and that's it.
How
Our
and
main
how
focus.
and how
Yeah.
does it vary from or is different from the other jewelers which are there in your sector?
It depends. Our focus is very focused that we are only into trading. We are not diversifying our focus on different sectors. We are good and we are perfect at one segment of the business, and we are catering towards that only.
Hmm. So when you say you are doing jewelry trading, it just to understand a little more on that a customer comes to your store and he selects a design and then you get it. You outsource the manufacturing and then it comes to you. Is that the way it is?
Yeah, so we have multiple vendors from all over India that we get our jewelry from, and then we display it on our stores, and that's how it gets sold.
What is the kind of inventory that you normally carry in a store?
In a store, it depends. As I can give you a total number that we are
Yeah.
carrying total inventory of 297 crores.
Hmm. Okay. And that's at the end of September, right?
Just a second. I'm sorry for the number. It's 320 crores.
320 crores at the end of September to 2023 for the
Yeah,
first
yeah,
at the end of first half of this financial year.
yeah.
Uh, there is something also in your RHP about revenue from in-house manufacturing. What you have a manufacturing facility in Jaipur itself. How big is it, and how much of that is been used?
So basically, we have two manufacturing units, which caters to 400 kilos of, it can cater to 400 kilos of utilizations, but we are not focusing on that. And our main focus is that if a customer comes for customization, we tend to create it in our manufacturing unit. It's a very small portion of our business.
Mm-hmm. Kaustubh, you are the CFO. Just give us a sense of how should a trading company, be valued in terms of the multiples. Because traditionally we have seen jewelry trading retailers have their own manufacturing and they have a higher margin profile. You are mostly into trading of jewelry. So how is it? How do you compare yourself with others?
Sir, thank you for the question. The thing is, firstly, for the manufacturing, as our joint managing director said, like we have a capacity of 400 kgs, but we utilize 0% of that. It's because Rajasthan is a state where it's like you have a different kind of a taste. And if we focus on the we try to go with the manufacturing unit, but we didn't got that kind of orders which was like profitable to us. So we'll focus on that because as we have like in Rajasthan we are the jewelers which who has 3 lakh plus designs. We serve to all kind of customers. So we focus on retail as like all the time in jewelry sector the trend change like very quickly, like within a month or two trend changes. And in Rajasthan people they just want to buy like more kind of a heavy jewelry, or sometimes they want a light jewelry. So we have a different type of customer base, so we focus on that mostly. And from the other jewelers, our profit margins are different. We have a highest profit margin as compared to others. Like our PAT is 6.06% in 2023,
Okay.
and EBITDA is also like higher.
But traditionally, the reason I'm asking is that we have seen a lot of your competitors listing on the stock market. They are, pan national or even region specific jewelers. But the best thing is that they do have they do job work, but a large part of it is manufactured in house, and they have sold, and they are into high margin business, and you have a different model altogether of trading which is there. So my question is that, why haven't you opted for that, and are you looking to expand beyond Rajasthan, or you're going to remain within Rajasthan?
Uh, to be very honest, like we are focusing to go ahead, and we are focusing to go for the expansion, and we are planning like wherever we get the opportunity, we'll definitely will go like to the different geographical cities.
Laksh, give me a sense of the expansion strategy that you have, considering that you are now only based at Jaipur, maybe one of the largest in Jaipur. How do you plan to go into other cities?
So we focus on most cost efficient manner. We have to like use a brand name also, and for expansion we find a better location for our store. And seeing geographically, we are more focused on in Rajasthan than compared to any other city. And so yeah, we tend to grow in Rajasthan particularly compared to tier one cities.
Mm-hmm. You're raising nearly 149 crores. What is the use of proceeds for that?
So 58 crores will be paid back to our commercial banks, and 71 crores will be used for working capital, and the left will be used for corporate purpose usage.
And none for growth purposes?
In working capital, we are tend to increase our inventory, so it will help us to increase our sales, and we can cater to more new designs. And of course, as our working capital increasing, and we have some corpus left, we can also expand our stores in different cities too.
And do you have enough capital to do that? Because you already have more than 300 crores of inventory which you have done. You're saying that the 71 crores is also going to be used for working capital. So what is given the fact that you are a trading company, why do you need such a high inventory?
It's basically because of more diversification of our portfolio. We want to add more modern designs. We want to add more innovative and fusion type of jewelry in our product portfolio. It will cater to more modern consumers. Like if you can see, they more competitors are coming and doing modern type of jewelries, lightweight jewelries. So we are focusing on that and intend to increase our sales over that. And having said that, our work, as you said, our working capital is already, our inventory is already 320 crores, and utilizing 70 more crores of working capital. Yes, it will increase our inventory again, but opening more stores, it will diversify our inventory into different stores too.
What is the strategy of opening stores? Because I've been looking at the RHP, and you in the RHP is mentioned that your lease agreement for stores are nil at 11 month. You go for an 11-month lease agreement for stores, while all other retailers go for multi-year lease agreements. Except for your Tonk, which is the flagship store you have, which has a 5-year lease agreement. All other stores have a 11-month lease agreement. Why is that?
Uh, so basically, all the stores where Motisons is located is pre-owned by the promoters, and that's why there's this type of agreement. And
So if it's pre-owned by the promoter, then it can be a long lease, right? Why is it only
yeah,
11 months?
I'll get back to you with this answer, and I'll make sure that I'll give you the proper answer for this.
Okay. My other thing is that you have a lot of related party transactions, which are the which you mentioned in the RHP. My question is that your all your stores and factory and manufacturing, everything is been owned by the promoters, and you pay a rent to the promoter for that. And just a while back, you also mentioned that though you have 2 manufacturing facilities, you have zero revenues coming from there because you're mostly doing trading. So why are you holding on to that manufacturing facilities if it's not going to be used, and paying company money to the promoters?
No, it's basically because we have manufacturing unit, we need to cater to every customer. So each and every customer are different, and they come up with their own. Sometimes they come with their own customization product, and we tend to cater to them. Plus, the old stock that we have, we try to replenish them in our own manufacturing unit. So it reduces the cost, and it maintains the cost efficient business for us.
So what percentage of your manufacturing facility is currently being used?
It around 10 to 15%.
And do you plan to ramp up this usage, or it will remain in this range?
It will remain in this range.
Okay, so basically the highly underutilized facilities will be maintained by you going forward. That's what you're saying.
No, I'm not saying that. I'm saying that our utilization will be around this much. It can increase as the demand of consumer increases of customization product, and as our inventory is already high, so we try to replenish most of the old stocks that we have, and try to utilize the manufacturing and in that manner.
See, your revenues are roughly around, if I'm not wrong, 366 crores for FY23. You're carrying an inventory of nearly 320 odd crores over and above that. It's a huge carriage which is there, and the cost which is carrying on your books. What are you doing to bring down the inventory cycle? Bring down the inventory cycle, because you're primarily into trading, which basically means as demand comes, you order those for manufacturing from third party and then deliver it back to them. So why do you have to keep a higher inventory?
As I already said, that we have 300 plus SKUs in our portfolio, and that is what making us very different in the market. And again said that the inventory days are high, and we are taking a quick measures for that to reduce our inventory days. As we have 364 of inventory days, we are planning to reduce it to around 300 days in this year.
Mm-hmm. Uh, Kaustubh, 14% of EBITDA margin for H1, 13.5 for full year. With the trading and the kind of that you're going to that strategy that you're going to employ with the money which you're raising from the primary market, how do you expect margins to move from here on?
Uh, I expect like by 150 to 160 it will increase.
Sorry, can you repeat again?
I expect like by 150 to 160 it will increase.
Okay, and this is in the near future, you're saying?
Uh,
Is it in this financial year or the next financial year?
this financial year.
Okay. Uh, I just wanted to get to some more understanding of the strategy of growth, because it's a different jewelry company, and in terms of strategy that you're following. To get us an understanding of this, Jaipur, how big is the Jaipur market? Because you are saying that you are looking at overseas other markets. You haven't gone and taken growth capital for expanding your retail footprint. Is primarily to deleverage your footprint and increase your inventories. So how does it, how do you plan to see a growth in this market?
I said that we have 4 stores right now, and we are more focused on the quality that we provide to our customers. And as it's a family owned business, which was carried in 1997, and we are taking a slow process, but yes, in near future we are tend to grow and expand into different cities. And as you said, the Jaipur market is a huge market. As we can see people from other cities like Bikaner, Ajmer, people are coming from there to buy jewelry. Plus, all the weddings, and Jaipur has been created a city of wedding. If you say that all the weddings have been shifted to Jaipur in recent years, and we can see an increase in trend of jewelry demand that has gone that has increased in last 2 years.
Mhm. Uh, you said that there's a large dependent on third-party suppliers for you. So how does it that third-party supplier is the one which is procuring gold and supplying it to you, or do you procure gold and give it to them for them to process it and send it back to you?
No, no, they only procure the gold, and we buy the whole finished good from them. And very little business we do with our job workers, that we tend to give our raw material to them, and they create the jewelry for us.
Mhm. Uh, can you give me some color on who these third-party suppliers are for you?
Uh, I cannot provide you with the names, as
But are they promoted entities or non-promoted entities?
it's a non-promoter entity.
Okay, and is it are they available? Means are they present based out of Rajasthan, or is a pan India thing for them?
It's pan India. We have suppliers from Kolkata. We have suppliers from Delhi, Bombay, uh, from everywhere.
Hmm. And
In
how do you ensure quality in such a thing? Because if procurement, gold, and processing is handled by the third party, how do you manage that?
We do our quality checks. We have rigorous quality check setups at our store, at our office, corporate office, and we deal everything over there in terms of quality. Any any harm in the quality of gold or any silver material, it is already taken care by our quality team.
So currently, you're basically focusing on gold, silver as the main jewelry. Many of the retailers have ventured into studded market as well. Have you looked at that market? Is there no market for, because Rajasthan has this heavy jewelry with studded jewelry market as well. So why haven't you looked at that market?
No, we are into that also. We provide jewelry of Kundan, Polki also.
Hmm.
And yeah, most of our jewelry and most of our customers are tend to buy jewelry of bridal collection. And so we keep all type of jewelries in our stores.
So what's the breakup between jewelry, plain gold and silver jewelry, and the studded jewelry that you sell for in your revenue?
I'll get back to you with this number. I'm not sure about the correct number about this.
Okay. I just have one more query. I was going to the RHB, and there were a couple of investigations pending against promoter and promoter entities. How do you see this investigation proceeding, and do you have any update on these proceedings?
So the most of the proceedings have been the promoters have been duly discharged by it, and some of ours is left. And again, I'll get back to you with all the proper answers with the I'll get back to you with my team, and I'll make sure that all the answers are correctly answered to you.
Uh, Kaustubh, uh, give me a sense of what could be the gains in interest which will benefit once you pay 58 crores of the term loans. And are you going to use some of the working capital which you are raising to repay short-term liabilities as well? Because if I'm not wrong, short-term liabilities are also quite high, right?
That is high, but they all are with the promoters thing, and which are being from the beginning. And after paying the 58 CR of the commercial bank's loan, it will affect us in the profits, as there will be no debt for the company, and as we are keeping the balance sheet asset allied, so it will benefit with the profit margins, and it will affect like it will give a good return to our shareholders too.
Okay, gentlemen, it was a pleasure talking to you today. Your IPO Motisons Jewellers is opening on December 18th. Price between 52 to 55 rupees per share. It's a fresh issue of 149.5 crores, giving it a market value of nearly 1390 odd crores at the upper end of the price band. The company is issuing nearly 27.69% of equity on a fully diluted basis, and it opens on December 18th. Thank you for watching NDTV Profit and joining us on IPO Adda.